Hey, I thought I would give you the Quincy Jones interview so you could see it for yourself. So without delay, here it is. If you don't know about Quincy Jones, he helped develop XDC. He's very well respected in the crypto industry, and people listen to what he has to say. So let's check out what he said.
Sure you'll be aware, and you probably get this a lot. So let's go for price predictions, and let's have a look at why we might reach some of those price predictions, and give me some sort of time frame. Obviously, there's speculation. We're not financial advisors at all. We're just talking and having a chat.
Yeah, I don't really do price predictions, but I can say this. One thing that you really need to look at when it comes to XRP and the overall value that's within XRP, and this is what really people need to get, because it's almost like this is what you're kind of asking when it comes to a price prediction. You're basically asking like, okay, so there's a race car race, and I need you to tell me, when is he going to finish the race? At what time? At what speed? And that's like, you know what I mean? Like who's going to get that? Like, exactly this minute and this second at this mile per hour is when he's going to cross the finish line. That's sort of what people are asking about. And the best way to look at it is you don't want to really look at it like that. You want to really look at it as more of a, well, where's he going to place? How about that? And I mean for the race car driver, not for the XRP, but you really want to look at it as, where do you see it in the future in regards to where it would look at it at full scale volume. And that's sort of the thing that people need to get. And that's sort of what I try to sort of instill in people, especially the hodlers. I'm like, look, you're not really investing in short-term volatility unless you're like a trader. You're investing in the long-term viability of these networks. So one thing that you really want to look at is, well, what does this network look like when it reaches its not quite its peak, let's say maximum utility. Let's say once it's reached a point where its maximum utility is just a runaway effect. Like it's just going to keep on going because it's, so let's look at that. The best way to look at that with XRP is, well, XRP, if you look at the entire liquidity in the market now, I think it's only like $50-60 billion worth of value in the XRP ecosystem. And I hate sort of comparing it to this. The biggest thing that you really want to look at is, well, what's everything that you plan on seeing on XRP? Add up all those assets together, whether it's currencies, bonds, stocks, blah, 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 whatever. And you don't want to look at the actual value. You want to look at the overall volume happening on those networks, and you want to sort of anticipate what the future volume may be. You got to remember, the volume on these networks now are high, but they'll be higher on XRP because they'll be faster, more efficient, they'll be cheaper. You see what I mean? You'll end up getting a exponential effect of being able to do more transactions for cheaper on the network because it's able to do it more efficiently than it was able to do it before. So that's sort of the way you really want to look at it. And I wouldn't even really look at it in price. I would look at it more in terms of like market cap, because it's one of those things where it's liquidity in the market, and market cap is just going to be determined based off of how much liquidity is in the market, based off the assets on it, based off the volume, based off of all of that. And it's one of those things where all of these ecosystems, not even just XRP, but all of these ecosystems are going to have comparable market caps to a lot of the financial ecosystems we see now, mostly because those old ecosystems are going to reside on these new public chains. Does that make sense? But
yeah,
in terms of, and this doesn't go for XRP. I would say if you're looking at any handful of coins and you're looking at sort of what the long-term viability would be, the best thing I would say is these networks are going to be multi-trillion-dollar market cap ecosystems. Now, who's going to do what and who's going to be the biggest and who's going to be doing this for who is going to be all determined. But the reason this is the case is all the financial markets are all multi-trillion-dollar market caps. The only difference is those markets are going to reside on these public chains. See what I mean?
Sure.
So that's the best way to look at it. And that's the thing. You can come up with your own price prediction there. There's a good range in there for people to sort of go. But my big thing is you're looking for that long-term viability, that long-term adoption. It's going to be somewhere in there. Don't know where it is, somewhere in there. And that's the thing, that's why I try to equate it to the race car driver. It's like, look, I don't know when he's going to place, but I think he'll be in the top 3. And not that XRP will be in the top 3. I just think that XRP would be able to reach a side to where the liquidity would be needed to maintain the financial markets as they are today, on top of being able to adapt them towards future use, which means they'll be operating faster, cheaper, more efficiently, all of that, on top of being able to do what they already do.
Okay. And obviously, yeah. So everything you just said, and then plus the 20% cushion or whatever. So that would give us extra liquidity. But let's go through. Obviously, you can't say time, but let's just go through some scenarios about how you think adoption may occur. How might this happen? What would be incentives?
Two big things: CBDCs and regulations.
Mm-hmm.
So the big thing with CBDCs, I actually just made a video about this. the big thing with CBDCs, that's going to absolutely change the game for everything. So the biggest thing that's sort of holding a lot of crypto back is people jumping from fiat into crypto. Like it's like the fees are high. People have to use Coinbase and use different like apps like that. And not everybody looks at these as like technologies. They look at them as investments. So if you weren't even investing in any way, you probably wouldn't even care. And there's so many of these things that people are sort of like, how should I put it? There's so many things that people are sort of like focused on that I feel like you don't really have to be. And the main thing is, well, how should I go with this? How should I put this? I don't want to get too complicated because I feel like I've been like too technical. So I'm like trying to be like, oh, what's the best way to put this?
I don't know. I like it, but I can always break it down to people. I'm going to upload this to YouTube anyway, so if it's too complicated, I can, even if I don't understand it, we can always talk about it offline, and I'll try and explain it to them. So just spurt out whatever you're thinking, and then let's go from there.
Let's just look at it like this. So when it comes to CBDCs and having CBDCs on the network, basically look at it this way. If CBDCs were operating on these decentralized networks, the same dollars in your bank account would be the same as like USDC and Coinbase. You see what I mean? Jumping from fiat to crypto will be entirely native in the banking system. That's
sure
the simplest way I'm trying to put it. And the reason why I'm trying to say that is it won't just be native for the banking system for CBDCs. It'll be native for the banking system for all financial assets. So it's like I said, stocks, bonds, derivatives, all of that will reside because of these technologies. Now, the reason why I say that is that's what's going to jumpstart people being able to actually interact with these technologies in a native manner without having to feel like they've jumped from the banking sector to crypto. And don't get me wrong, there'll be people that'll be operating exclusively on crypto. There'll be people that'll be operating in the banking sector using crypto. But that's the thing that's really going to determine the amount of liquidity being flushed into the network. Because that means you don't have a small minority of people getting into crypto. That means anybody can buy anything into crypto, and you'll start getting people buying into products and services that use crypto that they didn't even know use crypto, like a stock trading app. Like you can have Robinhood hypothetically changing its entire back end to run on a series of smart contracts, and then boom, it's already every single time you use that smart contract on Robinhood or whatever, it's adding more volume to the network, even if you have no idea that's what's happening. And that's the thing, you could be going from your bank account still thinking like, oh, I'm just using fiat to buy a stock, but in reality, it's using a smart contract on the back end to build that liquidity. So that's the biggest thing in terms of getting regular people into the space to where they can buy goods and services with crypto. And the second thing would be regulation, because the biggest thing now is a lot of companies, a lot of like financial firms are just sitting on the sidelines because it's either this is one of two. I would actually say there's three ways they go about this. Either A, they're like a small firm and they just do whatever they want and just hope they don't get sued. B, they sit on the sidelines because they're afraid they have to get a bunch of lawyers and aren't sure about how to do that. Or three, they just lawyer up and just go balls to the wall, and they'll just they just go with the lawyers and see what happens. But the majority of them aren't in that third one. The majority of them are sitting on the sidelines, and then the small ones are doing things on a small scale, but that doesn't even compare to what they could be doing if the regulations were in play. So the biggest thing with regulations is, what are the securities laws going to be in regards to what crypto is classified as, and what different cryptos can be classified as securities and as equities? Because this is important, because it's not that people are so worried about these cryptos being just securities. It's how do you manage like regular traditional securities on crypto networks? And the big example I always get is, like, let's say you had a Tesla stock. Let's say I bought a Tesla stock. Cool. Well, it's a decentralized network. So when I buy that Tesla stock, I now have the stock. Now, in a traditional sense, I would need a license to sell that, or I would need to go through a broker to sell that. But if it's on a decentralized network, I didn't need a broker to buy it, and I don't need a broker to sell it. So and that's not even the worst part. What happens if I sell that to somebody in Brazil and they're not even in the country, and I sold it to them, no broker, you see what I mean? Sure. Like, what's the securities laws on something like that? You may see a bunch of little guidelines for how businesses have to operate as opposed to what can be done on these networks as a whole. Because that's gonna be a huge thing. Like, what's gonna keep people from? And this thing, it's not even a bad thing. It's just that these technologies have come in a time in which the laws have not even accommodated or haven't even anticipated something like this even happening. Like the laws for a lot of these securities and a lot of these financial instruments were all built under the guise of centralization and centralized authority to get some sort of a consensus over what's happening and to actually make those transactions. Now that you don't need that central authority anymore, it totally flips the game on its head in regards to licensing, into certifications, into how would you operate normally And how would you operate into this new ecosystem without these central parties? And that's the thing. You need clarity on that before you start seeing the absolute massive, insane adoption that we're going to end up seeing. And the only reason I say that is we'd be seeing it now if that was already the case, but it's not. So the funny thing is, it's almost like it's building up and building up and building up. A lot more people know about crypto now than they did in 2017, and a lot more people knew about it in 2017 than they do in 2014. So it's building up and building up and building up. But a lot of people haven't really gotten off to the races yet because there's no clarity yet, and there's no liquidity based off going from the banking system back into crypto natively. So those are the two things that are going to have to happen before you start seeing just insane adoption like no other.
Yeah, so that's kind of what I've been trying to tell people like who follow my page. It's just like, it's just the same way. Well, not the same, but it's essentially a step similar to like cash to debit cards, because in a sense of the everyday person doesn't really understand something's changing, but something is changing. So when we take the step from like a normal currency now, a fiat currency, into a CBDC, like people will probably still, the everyday end user will probably still interact with it the same way, but it's going to be a completely different back end system, and that's what we're saying.
Exactly.
And then I understand what you're saying as far as like selling a stock or a share could go to somewhere abroad or something like that, because if you buy it off a decentralized exchange, no one really knows that you own it, and no one really knows that they've sold it. So how would they ever? And that's where there's the issues at the minute, I presume, with what's going on in Congress and this bill, even this week. But they're just, I'm not surprised they're miles behind it, because I research this all the time, and I feel like I'm still miles behind it. So like you have to cut them a bit of slack, I guess. But what would you suggest as regards to rules? The only thing I can really think of is something like everyone has identification, and everything that you have is tied onto the identification on the blockchain or something along those lines.
What I think you're going to see is, it's actually kind of funny because this is going to be super predictable. I think what you're going to see is you're going to see more regulation on licensing. And so what's going to happen is, although you can operate on a decentralized, like in a decentralized manner, I think to operate as a company, you're going to have to get all of these licenses and all this stuff. And then in order to offer these products, basically, it's one of those things where I think it's gonna be progressively more and more challenging for people to jump onto just strictly decentralized exchanges, except, or not even just exchanges, but decentralized systems outside of the regulations, except for having to do like self-reporting stuff. So it's one of those things where like there's not much they could do, except if they find out you're doing something that's against the rules, they'll come after you. But then they'll lay out a bunch of rules so you don't break those rules in a sense. I think that's what's gonna end up being sort of the deal, because there's not much you can do about it other than regulate the people that use the technology for businesses, because they can sue businesses. They can go after the executives for businesses. It's hard to go after random people online operating in a decentralized manner, but if the businesses are using the technology, they can definitely crack down on them for how they use it.
Thought I would share that with you. Thanks for watching. You'll have a good Sunday.